All right, welcome in to another daily editorial here on the KE Report. We're chatting with Dave Erfle, and we are again going to be talking about market reactions and some predictions from the U.S. election results, what it means for the resource sector, as we are chatting with Dave Erfle, founder and editor of the Junior Miner Junky. Now, Dave, boy, oh boy, it's a busy week here. U.S. election on Tuesday, big market moves on Wednesday. Today, we have the Fed meeting. They cut rates by 25 basis points. Not really surprising, but Jerome Powell's press conference, as always, caused some volatility. But overall, look, U.S. markets still doing pretty well. Yesterday was a just bang on day for them, but NASDAQ is still up pretty strong today. Precious metals have rebounded fairly strongly considering the drop that they had yesterday. And I think even more importantly, in GDX, GDXJ, SIL, SILJ, some big gaps from that down move yesterday in the charts, all of which pretty much perfectly filled today. So, Dave, your takeaway from that U.S. election, and let's just stick to resources here, that sell off that we saw in precious metals the day after the election results.
Yeah, it was interesting, Corey. My weekly article last week, my Kitco article, the headline was there's going to be three major events this week that could cause extreme volatility in the precious metals market. And also, I told my subscribers on Friday, my newsletter comes out every Friday. I said that it looked like that the gold started to sell off ahead of the election. It looked like it might be a buy the rumor, sell the news situation setting up in the gold price, because the gold price was going higher. A lot of it was safe haven buying because everyone expected some chaotic, civil unrest type situation if the election was close and it looked like there was some irregularities and Trump might say that the vote was rigged again or what have you. So the gold price started to sell off last week. And I said that I told my subscribers, look, we're really overdue for a correction here. The RSI on the monthly is over 80. Gold on the monthlies closed above its upper Bollinger Band for 7 of the last 8 months. We're due for a correction. And at least we should at least get a correction down to its 50-day moving average. And then when the market opened Wednesday, when it was a clean sweep for the Republicans and we knew who the victor was and there was no chance of a chaotic transfer of power, the gold price immediately made a beeline for that 50-day moving average and corrected almost $100 in one day. And by the time the end of the session closed on Wednesday, the gold price bounced a little bit, but it corrected at its 50-day moving average. The last time it corrected down towards there, the gold price corrected like $80, and it took about a week for buying to bring it back up. Well, this week we had that correction all the way down to the 50-day moving average in one session, and half of it has been taken back today on Thursday. We had right before the Fed announced its 25 basis point cut. We had Sweden announce a 25 basis point cut, and the Bank of England announced a 25 basis point cut earlier this morning, and then Sweden announced a half point cut, and the gold price was already up $40 by the time the Federal Reserve announced their 25 basis point cut, and then Powell didn't really give away what he was going to do in December. And the market immediately started to price in a 70% chance of a 25 basis point cut now in December. And the gold price tacked on another $5. And like you said, we had the GDX and GDXJ, which gapped down on Wednesday. Those gaps have already been filled. We're already seeing the GDXJ, the SIL, and the SILJ showing relative strength to the GDX. And because the GDXJ went down through 49, but came right back up above it. That's where the breakout level was. So it came back down to test 49, but GDX went through 40 and went a lot lower than that. And now it's come back. I think it closed right at 40 today. So now we've got the third catalyst tomorrow, which is the expected Chinese stimulus bazooka. So we're going to have more volatility tomorrow before the end of a 3-day weekend.
Yeah, Dave, and I think on the topic of volatility, we were already looking at this the last couple of weeks, looking ahead to this week, knowing it was going to be volatile. So how much do you read into these moves where they do go back and back test support at the 50-day? That's held a lot of times for gold, and it's also been a pretty good level for some of the other mining ETFs. But we also saw a strong dollar yesterday, and the dollar weakened today. So that helped push things down yesterday and lift things back up today. How much of this do you think was geopolitical capital coming off the table in the precious metals, where Trump has mentioned he wants to stop or at least halt those wars in Ukraine and some of the conflict in Israel? How much of it was geopolitical? How much of it was the dollar? How much of it is just volatility around not just the presidential election and the all of the Congress elections, but also the Fed policy and expectations and this anticipation of the Chinese bazooka? How much of this is just volatility that should be ignored? Do you think there's people making too much of these moves the last couple of days?
Yeah, like I said, a lot of that move was fears of civil unrest around the election. And that was immediately taken off the table in the morning. And when you saw it bounce back, you saw half of it taken back because of monetary policy being eased around the world, here and in England and in Sweden. I think the focus went right back to monetary policy. And, we've still got the wars in the Middle East and Ukraine versus Russia and potentially Russia versus NATO. And, in the South China Sea, what's going on there with Taiwan and China. So, that hasn't gone away. So I still think there's a safe haven bid under the price here. But I mean, seeing it bounce back so quickly today, that's very encouraging, especially with the stocks. I mean, I watched my account yesterday, Wednesday, the day after the election. It opened up, deep red. And most of those losses were gained back by the end of the day, even though the gold price ended down, nearly 3%. My particular account, which is chock full of higher risk juniors, was only down 1.5%. I mean, also you consider the fact that once the gold price hit 2,800, once it peaked there, silver and the miners started to show glaring relative weakness. So this was a hint that this correction was coming. So a lot of it was already priced into the miners.
Hey, it was due for a correction, right? There's no denying that. And some of these corrections didn't even go to lower lows. GDX did, but has very quickly rebounded here. So really a mixed bag, and a lot depends on, I think, what the trading action is like tomorrow at the end of the week. Dave, a lot of people on the bullish side are pointing to deregulation in the mining sector that could really help move some of these projects forward. I always want to take it a step forward or a step further and ask, will that also free up more capital for the sector? What's your takeaway from a deregulation that seems like it should happen? Trump's been pounding the table that he wants regulation to be pulled way back, but then also freeing up capital for mining companies.
Oh yeah, I mean, after he takes control in 11 weeks, I expect his new pro business administration to focus on streamlining the permitting process. I mean, that needs to take place with pro mining policies. I mean, there's potential for him to make sweeping changes as he basically has nothing left to lose, right? This is going to be his final term. He's 78 years old. He's already been demonized to the extreme while his reputation's been tarnished by Democrats and Rhino Republicans. I mean, he's been arrested, charged with felonies. So he has the full mandate of the people, right? He got the popular vote. He got over 5 million more votes than Kamala Harris. And it looks like he's going to get a full red sweep. I mean, the House is still undecided. I think they've got 209 right now. They need 218 seats, and Democrats have 194 seats. So the Republicans only need 9 more seats, and Democrats need 24 more seats to get a majority. I mean, the only thing that he didn't get was a filibuster-proof majority. So this is a trifecta, which is historically a rare moment where Trump could basically go all out and attempt to reform the entire system. But as far as mining is concerned, it didn't take long for executives of the Rio Tinto executive said today that the new Trump administration should focus on speeding up the permitting process. That's a big one, right? Because all these juniors that are and mining companies, majors and miners, that they're de-risking these projects. It's the permitting process that takes so long.
Yeah, Dave, it's a stark difference in how this looks versus, let's say, a country like Mexico, where we're still not sure what the new administration is going to do. There's a lot of uncertainty there. There is certainty there's going to be more deregulation here. Do you think that puts a premium on companies operating in the U.S. then? Are you more likely to start positioning in quality projects, or at least consider adding to positions that are quality projects in the U.S.?
Oh, I already have. I mean, there's one that I've been watching that I wish I would have. And if you guys saw that Alaskan copper developer Trilogy Metals, the stock soared from like 50 cents, 55 cents to a buck 39 with huge volume on Wednesday. It's that Ambler road, right? That proposed industrial use only road in Alaska that basically would enable advancing exploration and development of the entire Ambler mining district. And it's home to the world's richest known copper dominant polymetallic deposit. So, the Biden administration nixed that back in June. So as soon as Trump won, you saw smart money go in and really buy that stock up on Wednesday.
What about Trump's willingness and, I guess, preference for crypto, Bitcoin? Boy, oh boy, you talked a lot about Bitcoin. Bitcoin jumped on the back of that election result. We've talked a lot about how investors are distracted in a number of different sectors. Does this impact the precious metals, the mining sector at all, because Trump is so favorable to cryptos?
I think it'll affect both positively. Sure, you might get some bleed from crypto, as we've already seen, for the past several years. I mean, we still yet to have the generalists come into this sector, but if the gold price continues to go higher, which I expect it to, and we saw Barrick come out today and announce higher costs also of the top three gold miners, of Newmont, Barrick, and was the only one that announced, a surprise to the upside Q3 with a solid financial report. But so the gold price needs to continue to go up higher than cost for sure.
Well, and Dave, it's good that you brought up the earnings, because really the correction started when Newmont had that miss. And it seems interesting that even Newmont and Barrick, despite their rising costs, still made a lot of money. And the whole sector, the gold producers and even the silver producers now, are making a lot of money when they report these Q3 earnings, but some of them just missed expectations. How important is it that the underlying theme is that, in general, the precious metals producers are literally printing money right now, and that either gives them the choice of increasing dividends, buying back shares, or hopefully making more M&A?
Yeah, I mean, they've already done that, right? I mean, they've already shored up their balance sheets. They're already paying dividends. They're already buying back shares. So the last thing to do on the list is to add ounces. I mean, they need to add more ounces. So I expect M&A to continue to be hot here. I mean, we've seen more M&A deals, increasingly more M&A deals over the past several months, especially since Anglo Gold took over the rest of Cisco Mining. I think that was in mid-August. That's when it really started to heat up. So as long as the gold price continues to climb higher towards that $3,000 target, these miners are going to get increasingly nervous to add more ounces while these companies are still on sale.
So, Dave, after this week, what are you watching for? Is it anything in the charts? Is it any economic news? What is going to, I guess, further confirm in your eyes that, look, precious metals are still the place to be, these stocks are still the place to be, and arguably it's still early on in this move?
Well, I'm looking at the silver price, as far as in relation to the miner performance is concerned. I mean, last week you had silver back testing the 3250 breakout at the same time that GDX and GDXJ were back testing the breakout at 40 in GDX and 49 in GDXJ. So the silver price is really hinged with the performance of the gold stocks. So silver needs to get back up to $35 and above. We had a strong short covering move to back test that $35 level. And silver's gone right back up, and I think it's right around 32.50 again at the same time as GDX is at around 40 again. And like I said, GDXJ had been showing relative strength, so GDX, is still well above 49. GDXJ.
Well, Dave, there's still the school of thought that a lot of people believe we won't see the real fireworks in this sector until gold, silver, and the precious metals equities really break out in real terms against the stock market. With the stock market continuing to rally higher and higher, is that preventing the true breakout in this sector?
It's preventing generalists from coming into the sector, which is what the sector needs for that breakout. Yes, I believe so. I mean, we need to see that generalist retail capital come back into the sector. And as far as the silver price concerned, silver is the higher risk metal. It's more of an industrial metal now. It's 60% industrial now. So that gold silver ratio needs to get below 75, trending below 75. And it's popped right back up to around 85 or so. So we need to get that gold silver ratio going a lot lower.
Yeah, I guess we'll see what's happening. In all fairness, there are investors coming into the sector. We have seen inflows into GLD. We have seen breakouts in the gold price. So it's more of just a process. It's not like the sector is being completely ignored, but look, there's always room to the upside when you see just how much other markets have run as well. Dave, thank you as always for your time. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Thanks, Dave.
All right, guys. Thanks again for having me on.